For the past few months now, I've been backtesting gold to see how I can add gold to the currency pairs that I trade. And I've made two observations. The first is that gold is very volatile, which means you can easily make a lot of money or you can easily lose all your money. Secondly, gold is calculated in points and not in pips. Now, the whole aim of this video is to basically go into a challenge where I'll be trying to see how I can turn $100 into $1,000 trading only gold. And now the reason why I'll be trading only gold is basically because gold is very volatile and I want to take advantage of this volatility to see how I can quickly make a lot of money or quickly lose my money. I want to tell me what you think. Do you think I can quickly make the money or I'm going to easily lose the money? Let me know what you think in the comment section. Now I'm going to be applying two plans or two rules to this game. The first rule is to simply stick to my plan, and second rule is to simply stick to my strategy. Now my plans has 4 steps. The first step is to simply take only A plus setup. That means my first plan or my first step in this challenge is to simply go to the chart and look for only A plus setup, right? Second plan is to simply scaling as plenty position as possible to that A plus setup, right? Third plan is to simply go in full margin with that particular setup. That means I'm going to be risking everything that I have on that particular setup, right? Fourth plan is to simply take trades only in the New York section. That means I'm going to be taking all my trades or whatever setup I'm going to look for, I want to take it in the New York section. And I have a reason for this, which you're going to find out when we continue the challenge. Now, before we go into the challenge or before we go into the chart to look for setups, I want you to bear in mind that this is very risky and you can lose all your money. By the way, if you're seeing me for the first time, my name is Divine, and what I basically do on the channel is document how I trade and as well show you the mindset behind my strategy. If you want to see content like this, I want you to smash the subscribe button. I'll be right back. The first step in this challenge or the first plan in this challenge is simply identify an A plus setup. And for me to be able to identify an A plus setup, I simply need to go to the daily time frame and understand two things. The first thing is to understand where price is going to, that means direction. Second thing is to understand the key levels. So that's the first step I'm going to take now, to go to the daily time frame and understand direction and key levels. And for me to understand the direction of the market, I simply need to be able to use my trend line very well and identify where the support level is and the resistance level is. And clearly seen, we can see that this point here is simply our support level. This point is our support level, and for every support level there's always a resistance, and this point is the resistance that price is creating, right? So to interpret this thing now, I'm clearly seeing that price is respecting support and resistance. That means for every support that is price created, price has been respecting it, right? So basically, our next point now is to understand the key levels in the market. Where is the key levels? Where is the key point in the market? And for us to be able to do that, we can simply see that this point is basically our key level here, support key level, and this point is basically our resistance key level. Resistance key level. Now, the importance of key level is to be able to give us clarity on a particular angle we're going to focus on. That means once we identify key level, our focus is not basically on that key level that we have understood. And when we focus on that key level, we want to simply understand the market structure that price has printed on that key level and be able to understand where the supply and demand is. So basically, for us to identify this market structure and supply and demand, we want to go to the 4 hours time frame. Now, on the 4 hours time frame, remember our point of interest or remember our key level. We want to understand what price has done from this key level to this key level, and also what price is doing from this key level to the point where price currently at. And if I were to look at this key level, this point to this point, this resistance key level to this support key level, we see that price is printing series of swing high and swing low, lower lows and lower high, and price is also creating supply zones. And where is the first point of supply zone? This point is the first supply zone that price created, first supply, and this point is also the second supply, and as well this point that this candlestick appeared is also a supply zone. Now our interest now is to basically refine these zones to become point of interest, and be able to know what we're going to do next. And we want to do that on the 1 hour time frame. Now, see how I'm carefully going from the lower time frame, sorry, from the higher time frame, daily time frame, and knowing what to do there. Going to the 4 hour time frame and knowing what to do there. Now I'm on the 1 hour time frame, and I still also know what I'm going to do on the 1 hour time frame for me to be able to identify an A plus setup. Now, on the 1 hour time frame, I want to refine these zones to become point of interest. And if I refine these zones to become point of interest, I can clearly see that this first point here is simply our first supply zone or our first supply point of interest. And here is simply our first or second point of interest. And here is simply our supply zone that became a point of interest, right? So basically, our interest now is basically to understand how price is reacting from this supply zone. But first, the first supply zone that price created, how the price behave, what the price do at that first supply zone. Now, if I'm looking at this first supply zone, you can see that when price got to this first supply zone at this point, it reacted and then it failed. This is the point where it failed. When it failed at this point, we're going to define this one as it failed and it becomes a flip zone. That means the moment it failed at this point, it became a flip zone, and the flip zone is simply at this level here for a demand. So currently, price is acting as a demand zone at this level here. That means if you're looking at if you're looking at for a buy, we're going to be looking at to buy from this point to wherever we want to buy from. But we're not going to ignore the supply zone as well, too, because this supply zone is also very valid, and price is likely going to react from this supply zone. So having identified the supply zone or point of interest caused by a supply zone, then we want to understand where the liquidity is and be able to use liquidity to understand where we're going to take our entries and as well we're going to have an exit. So the first point now was identifying the liquidity. Now, if you look close at this point here, you can clearly see that there's an equal low at this point here. This equal low did not appear for a joke. For a joke, it came here for a reason, and it has not to be neglected. There's a reason price created this equal low here, and the reason is because price is giving us signal that price is likely going to come back to this point at any point in time. So it's very careful that we understand that this equal lows here came out for a reason. Now, is there any liquidity above this point to make this supply zone to hold? Yes. Where's the liquidity? Price is simply creating trendline liquidity. Price is simply creating equal highs as well. So basically, for us to know if this supply zone is going to hold, we want to simply wait for price to do two things. The first thing is for price to simply open tomorrow, which is being Monday. And if price open tomorrow, I want to also see price do any of these things I'm going to say right now for me to take an execution or for me to take an entry. And I'm going to be looking to either to sell from the supply zone or to buy from the demand zone. And for me to buy from the demand zone, I simply want to see price begin to sell if price open on Monday. That means if price open on Monday, I simply want to see price sell down to this demand zone, then I'm looking for a buy entry or buy opportunities. But if price fails to sell and price begin to buy, then I'm going to be looking for a sell opportunity to take out this liquidity here, because this is where I can see the obvious liquidity, right? So entry on this trade night is basically wait for price open, and if price open and price start going to the upside, then I'm going to be looking for a sell opportunity, and my entry is going to be at this point for a short, and my target is going to basically be at this point here. That's going to be my target. My stop loss is going to be right above this swing here that price has induced, right? Now, and before I take this trade, I'm going to be looking for two confirmation. The first is to understand how price is going to react if price gets to this point, and the second is simply identify a change of character. If I don't see these two confirmation, I'm not going to enter a trade. I made a video I made a video on how I actually identify confirmation and confluences before I take a trade in my last video. You can check it out and understand what I'm talking about at this point. So if I don't see those 2 points at this point, then I'm not going for a sell. Same thing is applicable when price are going to the downside. That means if price open and price starts selling to the downside, I'm going to be looking for a buy opportunities around this area, and I'm going to be confident taking this trade because price has simply swept this liquidity. And once price has swept the liquidity, then I'm going to be looking for a buy to the upside, and my buy is going to basically be as far as going to this, point here for a longer buy. Remember, the trend is bullish on the higher time frame. So basically, this short I'm trying to do here is simply against the trend, but I can be able to manage it. That's the most important thing. So I'm going to be ending this video at this point here. Whatever the outcome is, I'm going to be updating them on my status on Instagram. So do well to follow me on Instagram, and also I'm going to be updating it on my status on WhatsApp. So if you're not following me on Instagram, you should follow me on Instagram. If you're not following me on WhatsApp, follow me on Instagram. I'm going to add it to my WhatsApp. So basically, that's what is it for this particular video. Remember, I'm likely going to wait for price to make a movement, make a reaction before I take an action. And the action price I'm going to take is simply go buy. If price open tomorrow and start buying, then I'll be looking for a sell. But if price open tomorrow and start selling, I'm going to be looking for a buy. I think that will be all for this video. If you find the video very helpful, I'd like you to subscribe. If you want to see the video of how it played out, I want you to subscribe, like, and share this video. I will see you on the next one. Peace.